Okay. Hello, everyone. Hello. Very glad to see you again. This is Charlie Tian. I'm the founder and CEO of GuruFocus. Every Wednesday, first Wednesday of each month, every first Wednesday of each month at 1 p.m. US Central Time, I'm here and to meet you, to answer questions to you, to explain what we have been doing, and to introduce some of the new features. And of course, we know that last month the market was quite brutal, and we had one of the worst months in many years. And stock market is now in bear market for all the major indexes. But on the other hand, market is certainly much cheaper than before, and also the weather is much better. To our gladness, and Texas weather is much cooler now. And for our users, we noticed that a lot of users are checking the yield curve these days, actually. And let me share my screen with you here under Zoom. In Zoom, let me share my screen here. Okay, you should be able to see my screen now. And we noticed that many users are now checking the yield curve. The yield curve is here. If you come to our website, here's a menu, and it's under the market menu. We have a US Treasury yield curve page, and this page shows you the yield curves, the yield of different of treasuries, US treasuries in different maturities. 1 month is now here. 1 year is more than 4%, and 2 years more than 4%. Imagine not long ago, these are close to zero, and now it's 4%. And you can see the current yield curve. It's like this one. It's flattened, as we know. And 1 year ago, it's this one. It wasn't flattened 1 year ago. And 2 years ago, it wasn't flattened either. And this is a historical yield spread between the 10-year and 1-year Treasury yield spread. And this is a 2-year yield spread, 10-year and 2-year yield spread. And historically, when the spread is negative, when the 10-year and 1-year spread is negative, and there's always a recession. After the Second World War, this is always the case. And yeah, and unfortunately now the yield curve is inverted again, and with short-term yield is higher than the long-term yield, so the yield is inverted. And so most likely, if the history is any indication, most likely we'll have a recession, maybe in a few months, maybe in 6 months or so, historically. Yeah, okay, Helen, very glad to see you. I also want to say hello to everyone. Sorry, I was just too hard into what I want to tell you. And yeah, the yield curve is inverted here, and also for 10-year and 2-year spread, it's inverted. And if history is any indication, then most likely we'll have a recession. And you can check this yield curve anytime. It's updated daily, actually more, I think every 30 minutes or so. And you can check it anytime. It's under the market US Treasury yield curve, this manual. And we can see that historically, that's a yield 10-year and 2-year, 10-year and 1-year yield curves, and also the SP 500. We have found that usually when the yield inverts, the recession will come, and the SP 500, the market usually goes down earlier than that. And so I think it's an interesting curve. Lots of users are checking it also. one of the most frequently visited page on GuruFocus.com. And a related chart, also actually very frequently checked these days, the Buffett Indicator page. The Buffett Indicator page shows us where we are with the market, and where we are with the market valuation, and also the future possible returns are. Still, if we mirror with Buffett Indicator, the market is now modestly overvalued. The Buffett Indicator, again, is a ratio of total market cap over GDP. And we modified it to total market cap to plus the ratio of total market cap over the GDP plus the total assets of the Federal Reserve, which is actually this blue curve here, which is not as overvalued as before now, which is much better now. The Harris ratio was more than 150%. Now we are at about 110. So it's much better than before now. But the market seems still to be modestly overvalued, and the future return is not that high either. The future return, we're talking about maybe 2% per year, including the dividend. Another related page is Shiller PE. The Shiller PE tell you trying to mirror the market valuation also. Today it's about 9.6% higher than the 20-year average of 26. So it's the same, it's much better. The valuation is now much better than before, but it's still not that cheap. It's still not that cheap, similar to Buffett Indicator, mirrored as with Buffett Indicator. Another page we actually developed ourselves, we call it GF value for SP 500. Not sure if you're aware of this page. If you look at this chart, it's a GF value chart we have developed for stocks. And we also applied it to SP 500 index, to all the companies in the SP 500 index as a whole. And this indicator shows that the market is now modestly close to fair valued, modestly undervalued, somewhere there. So the valuation from this one tells us that it's modestly undervalued, but not that undervalued. Historically, this chart, the black line is a fair valuation, the blue line is SP 500 index. And when the SP 500 index is lower than the black line, than the fair value line, and usually the market goes up. Now today it's under it, and will it go further lower? I don't know, very likely, but today at least the valuation is much more favorable than before. And that's that's about valuation. And also another related chart I want everyone to know, if you don't know yet, it's an insider trend chart. The insider trend chart has been found that it's a very good indicator of the market bottom. If you look at this chart, it's under the insider's manual insider trend chart, insider trend. And the blue line again is SP 500. The green bars are the insider buy-sell ratio of the index, insider buy-sell ratio of all the companies. And when this bar is high, it's always a good time to buy. You see, this was March 2020, and it was a very good time to buy. This was during the financial crisis of 2008, 2009, good time to buy. This was 2011 during the government shutdown. It was good time to buy. Excuse me. And even this year during the June market bottom, market actually it was market down crash, and the insider buy sell ratio became higher. And if you go lower, these are the different sectors, the insider buy sell ratio, and also the sector index performance. You can see that for financial service sector, the insider buy sell ratio is actually quite high these days during September. And similar to for real estate, the insider buy sell ratio was very high for real estate companies. And the energy not that much, because of course we know that energy sector did really well this year and last year. And utilities better, not also industrials not that much. The most outstanding sectors are the real estate and financial sectors. They had a better insider buy sell ratio. And so I think this chart is worth paying attention to. And also we actually recently added a sell buy ratio, and we know that this green bars are buy sell ratio. We add a switch here. You can switch it to sell buy ratio, and it gives you a different perspective when there are more insiders selling than buying, for instance. And here it was 2021, early 2021, the insider was selling. Although they sold a little bit earlier than the market peak, but still it was maybe a good time to sell. That's that's where we have found, and I hope that you find this page useful. I think is there a good indication of when to buy in the market. Okay, these are mostly about overall market valuations, related pages, the yield curves, the Buffett indicator, the Shiller PE, and the insider trend. So, okay, if you have questions, feel free to ask me. I see there was one question. How relevant is Buffett indicator? Considering U.S. stocks are only bought domestically, is a global GDP a better indicator of available liquidity? Yes, U.S. market stocks are bought by domestically, by globally, but similarly, U.S. GDP is not also domestic. GDP is domestic, actually. I'm sorry, yeah, but not only U.S. companies. There are foreign companies as well. But still, I believe for U.S. I don't have a number here, but I believe for U.S. market, most of the buyers are from U.S. because U.S. is a much bigger country. Anyways, much higher income, much higher GDP, anyways. And it's a relative indicator. It's not an absolute indicator. It shows you a trend, an overall trend. Unless that if there are 20 years ago, compare with today, there are much more foreign buyers. The money is from foreign countries. But I don't think so. There are also much more non-U.S. companies traded in the U.S. market as well. And that's just a method. So you can actually do this in different ways. For instance, S&P 500 revenue or relative to S&P 500 index, it will all give you the similar trend. And okay, that's my comment. Now I want to show you some of the new features we developed. We developed. Okay, I see another question relative to this, John. And yeah, you said which one is more reliable, GF undervaluation or Buffett evaluation? It's a very good question. I don't think we cannot count absolutely on any one of them. but they won't be off very much. But I think you just use them as a reference. I'll consider both of them. And to me, I think market is probably somewhere close to fair valued at this time. Even if it's overvalued, it's not that much anymore. If it's undervalued, it's not that much undervalued either. That's my view. And now I want to come to some of the new features. One feature we added is the industry overview page. We actually improved the industry overview page. It's under the market manual industry overview. And this page, if you come to this page, you see an overview page where you see the performance of different markets. For instance, here, U.S. market, this U.S. market sector weighting, this is today's change of the market. But I think you can change it to weekly, and that was today's. You can change to weekly, monthly. When I click on here, you can see this is changing different sector performance. Today, the energy sector is doing the best. The real estate is doing the worst. But this chart is what we added, a new chart. It shows different sectors and different segment of market caps. So nano cap, macro cap, small cap, mid cap, large cap, mega cap, and it shows different market cap performance, the performance of different market caps. This one, it gives you an idea of whether the large companies doing better or small companies are doing better. Over 1 day and 1 week, for instance, 1 week, apparently the energy companies are doing much better, especially the large mag cap energy companies. The basic materials are doing okay, but the large ones are not doing well, and the smaller ones are doing better. I give you a more clear picture. And for instance, for healthcare companies, the small companies are doing poorly, but large companies are doing relatively better. I give you a better idea of which area of the market is doing well. And I believe that you can click on that. If you really want to find out which companies are doing well, you click on each one of these boxes, and you will come to all-in-one screener. It shows you which companies are included in the box for calculation, and it's also a way for you to do screening. For instance, you want to find out which mega energy companies are doing well, you just click on that, and then you come to the screener. It shows you which companies are doing well, the Shell, ConocoPhillips, and Total. Yeah, it shows you which companies are doing well in these boxes. That's how we structure the screen, so that you will know that which ones are doing better, and also for this sector performance here. And you can not only just look at the sectors, you can click into it. You can click, for instance, energy. Click into it, you can see the oil and gas and energy sources. Clicking even more further, it shows you the different companies. So that's an improvement we have for the industry page. Now, not just US, you can also see the country, different countries. This is ordered in order of the GDP of the countries. First one, of course, US. Second is China, and Chinese market has been doing very poorly also this year, except the energy companies. Some of the energy companies, everything else is doing quite poorly. And this is Japanese market. actually better. German poorly, very poor. European countries are all poorly. India actually doing better this year. Not that bad this year for India. And Italy, Canada, they're all similar to US. Korean, Russian, okay, okay, Russian companies. Australia, Spain. This is in order for the GDP of different countries. Okay, that's the industry overview page. And if you have questions, again, feel free to ask me. And now, let's go to individual companies page. If I come to the home page, we come to any companies. Just for instance, Amazon. As you know, you can always search for any companies here. And as we come to the page of Amazon, our GF value will show you that Amazon is undervalued. It's quite undervalued. Amazon is down actually from the peak about 35% here, as it shows here. And also, yeah, we have this GF score, and Amazon has a GF score of 95, which is pretty good, 95 out of 100. If you want to learn more about the GF score, always click on this help. Click on this help icon there to explain you the details how the 5 aspects of GF score is mirrored: the growth strength, the financial strength, the momentum, the GF value, and profitability. How they are ranked, and how important each one of them. And then this page, if you probably don't know that this page can be customized. And I talked about this last time, but this page can be customized, and it can be really useful. For instance, I can easily remove this one. I don't want it. Dividend buyback, momentum rank. If I don't want it, I remove it. And if I think that profitability is more important, I move it here, and valuation is now here. This page, okay, I want to make it more better looking, so I move this one here. So, or maybe I can move the growth here. So try to make it better, and I can move it. I can remove some of them. I can add the notes here. I can add the notes. So for instance, here I add a note to Amazon. So I said seems undervalued to be saved here. I can always check back later. The warning signs, analysts, the Guru latest trade. If I don't think it's that important, I just remove it. This is the Peter Lynch chart. The performance chart. Okay, this is a performance chart which compares the different companies, and these are the executives. I don't think I want to see them, so I just remove them. So make the page load faster if I remove the contents that I don't check that much. And I can remove them. I can move it into different portion, different places, so that it works better for me. That's for the summary page, stock summary page. And we also actually improved the compare button here. So that now when you come here, you just click on improve, and the companies will be listed for you automatically. Because I have Amazon here, so it has other online platforms such as Alibaba, JD, PDP. These are Chinese companies. Mainly, I think the South American or Mid-American online platform. C, this is the South Asian company. So all eBay, Chewy, these are different platforms. Of course, you can add them. You can add other companies to it. You can add, for instance, you can add Google if you want. You can add Google to it, Alphabet to it. You can add to it, and then you can compare different parameters here. The parameters, the default will give you lots of parameters, and you can always customize it so that you can get the parameters you want. If you think you don't want this, don't want that, you don't want that, you just change them. If you want, for instance, others, you want PEG, PEG ratio, you add them. Yeah, it's added here now. Okay, if the reverse DCF, I think it's called, let's try it. Reverse DCF growth rate, yes, it's here. So you just add them here. You can remove the ones you don't want. And you remove the ones you don't want by simply click on the cross here. And then if I like it, I confirm it. But still, if I want a column that I want to go front, I just drag and drop it to where I want it to be. It will be set there, and somehow it's a little bit slow now. But yeah, it should go to where I drop it. It's now here, and of course, you can always change the companies. If you don't want this company, you can you can clear all of them. Then you add your own. You can add your own by searching here or compare with any companies you have in mind. So this is a compare feature we have improved. You can not only compare the current data, you can also compare with the historical data. For instance, I want to compare all the companies, all the competitors, and I want to compare their, I want to compare with the P ratio, the historical P ratio, for instance. P ratio. Somehow it's, if I could, somehow it's stuck here. Yeah. Okay. Somehow it's stuck. Let me open another window here, and I'll ask the developer to check why it's stuck here. And so you can always, yeah, we can always compare any companies we want, and in the parameters, for the parameters that we are interested. And if I look at the let me try this again, why it's stuck here. The P ratio. Oh, why it's always stuck here. Okay, there's probably a bug here, and we will fix that. Yeah, the historical P, not sure why it's doing that, but we will definitely check it. And the DCF module is reverse DCF module is included there, and in the compare. Yeah, try that. Historical data seems to be there's some bug here. Again, whenever you find a bug, whenever you find something which is not working as expected, always contact us on the chat support, or you can create a ticket, and chat support, someone will be there during the business hours for the US Central Time, and you can create a ticket. You can, if you want a one-on-one meeting, actually, you can always schedule one-on-one meeting with one of us, and someone will be there and show you how to answer all your questions, and show you how it works. Okay. Let me answer the questions. Okay, Rafael is saying that miss a Wednesday weekly meeting with investment gurus and their philosophy. Any plans to bring back? We actually currently don't have plans to bring back. to support that program is actually very resource consuming, and we kind of run out of the people that we want to interview, and some people also and lots of people don't want to show up when we contact. We kind of run out, and also it's very resource consuming, and so we at this point we don't have plan to bring it back. I just answer the question about compare, and for Pedro, I hope that answers your question. And new Amazon, okay, and your question about Amazon, Rafael. And let's try Amazon again. Okay, let's go there. You said that Amazon has a very high PE ratio, but why we see it's actually undervalued? This is actually a very good question. It's a very good question. And P ratio is, of course, a very good indication of the valuation. But historically, Amazon always had a very low profit margin, and they intentionally keep the profit margin low so that so they don't have to pay tax. You can see even today, Amazon has a net margin of only 2.39. And if we look at historical margin, historical Amazon profit margin. So I click on that and come to the historical profit margin of Amazon. For a long time, Amazon was actually losing money, and the margin was negative for many years. And even when it's positive, it's very low. Why? Because they don't want to pay tax. They don't want to pay tax, but over recent years, the profit margin of Amazon is going up quite quickly. So margin is expanding. So in this kind of case, PE ratio is not a very good indication of Amazon's valuation, and especially let's look at a long-term chart, and let's look at the interact chart here. And if I look at PE ratio of Amazon, and you can see that most of the time, because earnings is negative, so the PE ratio doesn't have meaning for Amazon, for company like Amazon. But if we look at PS ratio, actual PS ratio, in this case, I think PS ratio is a better indication for Amazon. And if we look at 15-year PS ratio, if I remove the price chart, you can see that PS ratio is much lower than now. Is lowest in the last 5 years, and Amazon has been doing actually first very well over the history. The PS ratio is actually similar to current for very long time, and P ratio is just not a very good indication in some cases. And in some cases, it's a very good indication, but I would say that P ratio is in more cases it's not a good indication of the valuation. Than more often it's not than it is. Yeah, that's Amazon. Again, Amazon will have a very high GF score, which is an indication of the quality of the company, actually, mostly the quality. And quality is certainly very, very good. I hope that answers your question. If you have questions on this page, feel free to let me know. Okay. Okay, let me answer the question further. Amazon is losing money to avoid taxes. How is a good company if it's losing money? Amazon was building a lot. If you look at financial statement, Amazon was expanding like crazy. They were expanding, so they spent lots of money on the expansion, on the capital expenditure. So in this case, their cost was high. They spend lots of money on expenses. So in this way, their profit is low. But if you look at them, let's go back again, this chart again. But I think it's a good question. Let's look at their net income. Amazon net income for a long time, it was close to zero. Look at here. But if you look at the cash flow, free cash flow, okay. The cash flow actually, operating cash flow. Cash flow from operations. Cash flow from operations, this one. Yeah. This is this lower line. Let me change the color to make them more distinguishable. The black line, the green line here, sorry, the red line here is a net income, and you can see historically for long time it was close to zero, and in this way Amazon doesn't have to pay tax. But if you look at the free cash flow, the cash flow from operations, and it's much higher. The reason is because Amazon spent lots of money on the capital expenditure, and in this way, they avoid taxes. Yeah, you can do more research on that. That's actually the way how Jeff Bezos says. When I remember somewhere he mentioned something like that, and so although the operation brings in lots of cash flows, but Amazon spend all the money on the expansions so that they don't pay tax. But in recent years, Amazon's really making a lot of money, so much money that they cannot spend that much anymore, and they start to pay tax. The cash flow is even better, especially with the AWS business. Amazon has a very high profit margin on that. The retail business is kind of has a low margin, but the AWS has a very high profit margin. And that's where it is. And thank you for the question. Okay. And if there's no question about this, and if you, again, I encourage you to customize this page, the summary page, so that it can work better for you. I personally customize about this way. Some key parameters I look first, the profitability, financial strengths, and also the financials. You can move them around. You can also add a component here. If we have something that you can add here, we actually have a goal of that we can add every chart, every modules, including DCF, and different charts into this summary page, so that in the future you will only need to come to the chart, actually come to this summary page, and it will do most of the things you want. You can already add chart here. Actually, if you add chart here, if I want to add a chart, yeah, and I think okay, it should add a chart for you. Yeah, it's already default. Add a default chart here, and then you can change it, configure it, and change it to different charts. We are actually still working on that, and we are still working on that. We'll make sure that it works for you. Okay, let me look at the question. John is asking, is there a way of knowing which business or company bring the big profit? You have to look at the annual report. That's the best bet. We actually have some data on that, not a lot. We have some data. I think it's under 30-year financials, but still the most important portion work will be most of the data will be from the annual report. We should have the segment data, but it's called segment, different segments of the business. The most An important source will be the annual report. Give you the detailed information. By the way, if you want to check the annual report, it's actually very easy from GuruFocus. If you here, you can see there's a SEC filing link here. Just click on that, and you'll go to SEC chart website, and here the 10K will be the annual report. If you click on that, and it will load different the Amazon annual report for you. And then you can look for a segments, different segments just in the document. See here, it says North America, different international. Yeah, it should be in the annual report or in the company's investor relations business. Yeah, it tells you that result operation into 3 segments: North America, international, and AWS. That's actually how the segment works here. You can see that in case of Amazon, North America is that much sales, and international and AWS. It tells you different portion. AWS actually the sales is not that much, but the profit is much higher. You should be able to find it from the, here, it's actually exactly here, the operating income loss. You can see that for North America operation, although the revenue was much higher, the operating income was only 7 billion. International operation was losing money for Amazon, actually, although the sales was pretty high. Sales was 27%, I think. But the profit is mostly from AWS. It's 18 billion. And you can find it here in the SEC filing of the Amazon 10K. So it's very easy to do. And if you start with the SEC filing link here, it's really easy, simple to do. I hope that it's clear for you, John. Okay. Okay, and if you don't have other questions, I will continue to go to the new features we created. If you want to know more what you are working on, you can always come to the changelog here. It's under the changelog. Here we show you what we have been working on. The industry overview I have mentioned, a stock idea page. Let's go to the stock idea page here. And we created a stock idea page, and which actually list and explain all the screeners we have, and what they are and how they are structured, things like that. And they are all linked under this screeners manual. If you come to the screeners manual here, these are all the all-in-one screeners, different all-in-one screeners, different pre-existing all-in-one screeners. And when you create your own screens, it will be listed here. And we also have some value screens we created over the years. Then they're listed here. Here it shows you how many new stocks from each screener. You can check those for an overview, how many new stocks. And we also have model portfolios, which we built over the years, show you the different portfolio or different strategy performance, the performance of different strategies. And let's go there. I just want to show you the model portfolios. And you can see that here there's an overview, the Guru strategies, the SP 500 over the years, the most broadly owned stocks portfolio over the years. This strategy I have started ETF based on it, and outperformed the market for 13 out of the last 16 years. So, but this year it's underperforming. but that's where we are. We also have this GF score strategies portfolio, which we started this year. And for different GF scores, we created different model portfolios. We'll check their long-term performance. This page is updated daily. So far, we have seen an overall trend that for the poor, for companies with low GF score, they do poorly. And they do poorly. For the highest ones, so far we haven't seen the difference yet. We haven't seen very much difference so far. If we see over the course of the last 6 months, the high GF values score company did better, but at this point, they are similar to the SP 500. Okay, let me answer the questions about the gurus. I think there was some questions regarding to, okay, asking about Ron Baron. Okay, yeah, I will go to the performance. Okay, he was asking about Ron Baron. Let's try Ron Baron here. Okay, we come to Ron Baron's page. This page shows, okay, that's an overview. He owns, his firm actually owns 300. This is actually the fund he manages. It's a Baron fund. Baron funds. He owns 371 stocks and 18 are new for the last quarter. That's a $31 billion fund. As of last year, his largest holdings are Tesla, Gartner, CoStar, FactSet, those kind of companies. These are his top holdings, top 10 holdings. You can see that the top 10 holdings, these are the change of the top holdings. This one is Tesla. The blue one is Tesla. It has been his top holdings for quite a while. This one shows the trend. Should we show you the trend of his top holdings? This chart shows since the last quarter portfolio update that's June 30th. The performance of Ron Baron's fund relative to the SP 500 seems like since June 30th, his portfolio has been doing better than the SP 500. That's his year's returns over the years. Okay, that's his new stocks sector. The sectors he covers, his largest sector is this one, consumer cyclical, and his different sector, financial service is his second largest sector. Yeah, that's the overview. If you want to look at his portfolio, which come to his current portfolio page, here it shows his top new holdings. First one, actually the one he bought the most over the last quarter is AMD, and we all know that what that company is. Second one's LU. I'm not sure. Actually, I don't know about this company. Sprouts Social. I'm not sure. Actually, Lily. I know we know that company. Airbnb. These are the companies he owns. And now if I click on that weighting, it shows his largest holdings. As said, it's Tesla. Can add that to your own portfolio. You can look at the history of how much he owns Tesla over time. He bought a lot, 2014, 2015, 2014. And now he reduced in 2020. And then still it's his largest holding by far. And Tesla price, of course, went up a lot. We know that Ron Baron did really well in the year of 2020, and 2021 wasn't very good. This year, I don't think he has been doing very good. His fund is similar, in certain areas similar to Casey Wood's performance, and actually in some area, I think high growth, companies which did really well in 2020. I didn't check his performance this year, but we should be able to see it here. Okay, last year he underperformed that. Oh, he did better than the SP 500. This fund. This year I'm not sure. Didn't check it yet. But that's how you check Ron Barron's portfolio. And look at his top holdings, and you can also go deeper into his portfolio. For instance, you want to check the top growth companies in his portfolio. You just click on this top growth, you can see the companies that's has high EBITDA growth for Ron Barron. In Ron Barron's portfolio, the first one is installed building product. Second one is Amazon. This is based on 10-year EBITDA growth. Yeah, in last 20 years, he certainly did better than the SP 500. And this at least is based on 10-year growth. And you want to see some undervalued companies in his portfolio. You will see D.R. Horton. He owns lots of companies. Some companies which is close to the 52-week low. You can check here. Some company insiders are buying, and yeah, insiders buying some ETF. Some of them owns ETF. He owns some QQQ, which is very little. He owns very little QQQ, and this tabs allows you to go deeper, dig deeper into his portfolio. Okay, let me look at the question again. And if you have questions, feel free to let me know now. We have only less than 10 minutes left. And if you have questions, feel free to ask right now. And I will do my best to answer your questions. And okay, John is asking, how much downside do you think is there more left for SPY 500? Or do you think the bottom is already in at 357? I'm sorry, I cannot answer this question. I have some thoughts, but I don't think I can see it now as this meeting. But historically, I remember I did some statistics before. The bear market usually lasts about, if I remember, close to 450 days. Or between 450 to 500 days. That's what I remember. I don't remember clearly where. So we're now about 1 year into the bear market. So, and I don't know how long this one will last, but I believe that the economy overall, although it's inflation is bad, but if you look at the large companies and the large banks, the largest companies in the US, they are so strong. The largest company in the US is Apple, Microsoft, Google, and they are so strong. So you don't worry about them at all. You don't need to worry about them at all. They are so strong. Not like 20 years ago during the dot-com bubble burst, the largest companies went bankrupt, like WorldCom. But this time, I don't think it will happen because there's no possibility. And then we look at the banks. The banks is in a much better situation than they were in 2008, 2009. The banks are cautious and they're all well capitalized mostly. And so I think the risk is small. Of course, the US dollar is so strong these days. Inflation is still high. The Fed will continue to raise the interest rate. Fed will continue to reduce their balance sheet. And yeah, and so there are good side and bad side. Overall, the macro picture is not that good. There's a war going on. We don't know if Putin is going to use nuclear weapon. We don't know, and how bad the war will go, how long the war will last. Inflation is bad. Europe is doing poorly. US is doing much better actually, and but that's a macro picture. That's not good. But if you look at individual companies, they're good. they're actually good. So I would rather look at the individual companies instead of the macro picture and to worry about the macro picture. And overall, over long term, still the earnings, the profit of individual companies will decide their stock performance. That's what Peter Lynch said: earnings and earnings and earnings. By the way, this chart is the Federal Reserve total assets. And during the pandemic, they doubled the balance sheet. During the financial crisis, they actually increased the balance sheet a lot. Then they tried to reduce it. Then they doubled it during the pandemic. Now they're trying to reduce it again, very slowly. You can see that they're doing it very, very slowly. But already, even with this kind of speed, we're already in trouble. The mortgage rate went up so much, and the yield, the borrowing cost is much higher these days. Okay. Okay, Eric is asking, can I screen gurus, for example, by performance or portfolio weight? You can screen with a portfolio weight. We don't have the complete performance data, but you can screen with portfolio weight. You can screen gurus here, and you can select some of the gurus or the gurus, for instance, some of the list. You can select them. Then you can screen by the number of gurus are buying and the number of holdings. Okay, turnover. The impact. Well, okay, minimum weighting. If you want minimum weighting at least 2% or at least 5%, yeah, you can do that. You minimum weighting. You can also to look at the recent quarter performance buy sell impact. You can do that. Can also buy the shares outstanding, a number of shares or percentage shares outstanding. So if it's a large position in a company, yeah, you can always do that. So that's how you do it. You can do that. Portfolio weighting, yeah, of course you can combine that with industries here. Can combine that with you only want a company in certain industry, you can do that. I hope that answers your question, Eric. Seems like we are running out of time, and we don't have many questions either, and okay, seems like we don't have lots of questions either. And thank you very much for attending again. And again, I'll be here on Wednesday, first Wednesday of each month, and I will be answering your questions. And I forgot to ask you this time where you're from. Let me know. Still, leave it in the area, in the answer area. Let me know where you're from. I'll be glad to see different users from different parts of the world. About Chinese companies. Okay, John, about Chinese companies. Do I think that they're artificially suppressed by the government? I don't. I think it's more about the economy instead of just the government suppression. And the economy is really not doing that well in China. And the pandemic, it's unbelievable. They're still doing the COVID test for everyone in many parts of the country. It's crazy. And my parents live in countryside of China. Still there, the village they have lived for life where I grew up. It's a very remote village, countryside, and they're forced to do COVID test every day. My parents in their 80s. It's crazy. It's unbelievable, and it's sad. It's sad. And sorry about this, and thank you all. See you next time.